Good day, grade 12s. Welcome to exam prep, market failure. Right, in this lesson, we are going to explore some past papers from the Department of Basic Education, grade 12s. My name is Carden Madzokere, and I'm the author of the Distinction-Bound Student textbooks. I have grade 10, grade 11, and grade 12 economics. All right, so let's get started with the lesson. Right, market failure is one of the topics that learners struggle with. Personally, the topic microeconomics is my favorite, and I always encourage learners to choose in paper 2 to choose questions 2 and 4. The reason in section B, the reason is question 2 is microeconomics, question 3 is contemporary, so I sort of discourage them to answer that, but some learners find it okay. The main reason I want to encourage learners on the 2 and 4 is because of perfect and imperfect markets. Those two topics are very, very easy. The only challenge they face is market failure, which also is quite easy, but learners struggle with it. So I don't know, but if you are going to go for questions 2, 4 in section B and question 5 in section C, you'll have to master market failure, because it could be the only reason you might not get a good mark, because your perfect and imperfect will definitely be very good. All right, so to get started, in this on exam prep, I'm mainly focusing on section B, and so it's data response questions. Right, so in an exam, you'll find such a question. Study the graph below and answer the questions that follow. So let's do that. Let us study the graph. Let's see what's going on here. All right, so it says here market failure. We have housing on this axis, we have schools on this axis, and you see they say thousands. So whenever they ask you a question, this one, you'll have to write 1,000 as your answer, because if you say 1, it's wrong, because it says thousands here. So that's number 1. And if it's a table, they'll normally show it, so make sure you take note of that. Right, the next thing, okay, this is a production possibility curve. Some will call it a production possibility frontier. And just to see what's going on here, I see here it says market provision. Okay, so market provides 8,000 houses and probably 4.6 schools. And then what else do I see? And this is the socially optimum level. Okay, so government has to chip in because this will be socially optimum, but the market is providing this. So we see an undersupply on the market, and that tells us, because normally this happens with merit goods. So these are goods that are deemed to be good. So there's an undersupply here, and so that's how markets are failing. Okay, so that's what we see here. And this here is the optimum resource allocation. And so this is productively efficient, and this is allocatively efficient. If we could put an indifference curve here, this would represent this here, point here, will be both allocatively and productively efficient. Okay. Right, in an exam, you won't have the time to analyze the graph the way I did, but yeah, I'm doing this so that you get the skill of analyzing a graph. So before I see what they're asking me, already I'm careful. My answer should say thousands. Okay, so 12,000, 14, 16, like that. And I should take note of this. This is socially optimum. So the market is failing mainly because the market is under supply. Okay, so this is normally a positive externality. So yes, it's market failure, positive. Okay, Let's get to the questions. Identify the number of houses the market will provide if all resources were spent on houses. Okay, this is pure production possibility curve. Right, so that will be, okay, let's see, where is houses? Here is houses. It says here, identify the number of houses, the market. So we are going to look at the market. So that will be 10. But remember, I said be careful to include this. All right, so there we have it, 10,000. Okay, as easy as that. So this normally, I told you, the first question I told you before, the first two actually, they are so easy that getting them wrong, you are just not doing yourself a favor. Right, how many schools should the government provide? Listen carefully. Should the government provide to reach the what? The socially optimum allocation. You see, socially optimum. If you say 11, you are implying that the government should not produce houses at all. And so 11 is not socially optimum. You see that? But according to what we see here, we come down, it's 6, we add 1,000. So it's as easy as 6,000. Briefly describe the term market failure. Okay, I told you my favorite definition. Let's see what we have here. Now, my favorite definition is failure of markets to allocate resources at an optimum level. Let's see this one we have here. When the free market is unable to allocate resources efficiently, which is okay, the best production outcome has not been achieved. All right, so it depends on you which one is easy for you to remember, or which one is your favorite, which one do you think is the most appropriate, most correct. It's all up to you, but as long as you are correct, we'll mark you right. Right, why are markets reluctant to produce public goods such as roads? All right, there are two main reasons according to me. And the first one is public goods it's because of the characteristics. Public goods are non-excludable. That's my main reason. The next one, public goods are non-rivalry. That means consumption of one does not diminish consumption by the other. And the first one, it's impossible to exclude free riders. And this happens because if you look at let's say if you look at street lights, okay, the ones I pointed out are these two. Okay, we see here non-rivalry and non-excludable. I'm going to look at these two just now. The reason is if you look at what every private business, because here it's asking why are markets reluctant, you see, so it means the private sector is reluctant. The private sector does not want to produce public goods, but the question here is why. And the reason is it's if you look at what businesses provide, they provide us with goods that are excludable. So it's easy for them to exclude those who don't have the money. It's as easy as that. If you don't have the money, you might be willing to have a burger, but if you don't have the money, we are going to exclude you from enjoying it. So you see, you want nice clothes, but they are excludable. So you can't just walk in, take what you want and go. So businesses they want to provide such because it's easy for them to make money. Now, if a business tries to provide traffic lights, how would they collect money from free riders, those who are not willing to pay or those who are not able to pay? You see that? But so for that reason, there has to be something central, which is the government in this case. So government provides us with those goods and they collect tax for that. So they provide us for free, but it's not really free. We are paying tax for that. And then the next reason is public goods are non-rivalry. That means consumption by one does not diminish consumption by the other. You consume a public good, it's still available for the next person to consume. But look at private goods. Consumption by one does diminish consumption by the other person. It's easy to make money out of selling things that are rivalry, like shoes. they are available for one person to wear. Like, you see, things like that. Things that businesses provide us with. You buy a car, put a number plate, it's yours. It's for one person. All right, let's see what else they have here. It requires a huge capital outlay. Okay, but I don't quite like that. Of course, it may be true, but people can put money together and so on. The main reasons, according to me, is those two ones there at the bottom. The next question, which is the last, how can the government ensure macroeconomic stability through their involvement in production? All right, so we have number one, government can ensure macroeconomic stability in production by using the monetary, which is executed by the I almost said National Treasury, but by the Reserve Bank, the SARB, and fiscal policy, which is executed by the National Treasury. So for the monetary policy is the MPC, that is the Monetary Policy Committee, led by the Governor, Lesetja Kganyago, at this time. And the fiscal policy, that will be the Minister of Finance, led by Tito Mboweni at this point in time. So through interest rates and corporate taxes, blah, 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 all those things, you see. Right, then government can also use the supply side approach by applying policy to increase the flexibility of factors of production and infrastructure. Producing goods, that is for missing markets, it's one of the reasons for market failure. Not provided by the market. Normally, we have public goods to talk about there. All right, the next one, study the graph below and answer the questions that follow. Okay, let's do the study. It says here market failure, and it clearly tells us it's a negative externality. So what we had before was a positive externality. Now we are having negative. By the way, these questions are from past papers. I don't know which year it was, Feb, March, or it was June, or it was November. Here in South Africa, kept syllabus. All right, so they say study this graph and answer the questions that follow. Okay, let's see what's going on here. Let's do the studying. This is the marginal, I almost say propensity to consume. This is the marginal private cost, and this is the marginal social cost. And so what we have in between is the marginal external cost. Okay, so I can write here marginal external cost. All right, what else do I see here? And we all know that marginal, each time I want to say propensity to consume, we all know that marginal private cost plus marginal social cost, plus marginal external cost gives us marginal social cost. And we also know that when marginal social benefit is equal to marginal private benefit, then we say it's optimum resource allocation. All right, then which is the opposite of market failure. Right, here is what the market equilibrium is. So we are having a situation of oversupply. So I can say here over. In other words, the market is producing 10 instead of 6 maybe. All right, so there is an oversupply of 4. So that's how you analyze a graph. And so this one here, like I said, is the marginal external cost, but we can also call it a dead weight loss. Okay. And why? Because these are marginal units, and you know what the word marginal mean? It means extra, additional. All right, so this could be something like a cigarette. And so this here is what the market should, but actually the market is providing this. And the reason is the market is not, is failing to include the private, the social cost that cigarettes have, the cost that cigarettes have on the society. Are we clear? So this thing here is only including the private cost. It's not putting the social cost into consideration. So in other words, the market is charging this for something that will cost the society this much. So we are having an oversupply of cigarettes. If I make this cigarettes, so this here is representing, if you look from here, an additional unit like a 7, what happens to marginal social cost? It increases. But look here. So this whole section here, it represents a deadweight loss. Okay, let's see. Give an example of a negative externality. Okay, here you can give anything like cigarette. I told you that. Pollution, substance abuse. Yeah, things like that. Name the shaded area. I've done that already. Deadweight loss. Welfare loss. Negative externality. You can also say it's the external cost. You can call it the marginal external cost, like I said here. But you see, I put the word M there, marginal external cost. Right. Briefly describe the term social cost. Okay. Social cost. What is a social cost in your words? Social cost is the cost to society, which includes private costs and external costs. So it's a combination of costs of goods or services to producers and consumers and society as a whole. Yeah, that is what. So it's the cost that the society, bears as a society as a whole. Okay. Then the next one, explain a lack of information to entrepreneurs as a cause of market failure. All right. Lack of information. And here, by the way, I don't know if you remember, but in one of my lessons, the first lesson to market failure, I gave you this word here, milli, like this. And I said you can use this word to remember the causes of market failure. Here they're saying as a cause of market failure. So you see here, L, that's this one here, lack of information. So we have missing markets, we have imperfect markets, we have externalities. Here, this is an externality, but a negative one. Then we have lack of information, we have immobility of factors of production, and we have imperfect distribution of income and wealth. So here they want you to explain lack of information. And there you have it, a lack of information on costs, availability, and productivity of factors of production will reduce its effectiveness in production. So because of this, there can be oversupply or undersupply. And remember, oversupply or undersupply is what we are referring to here as market failure. So when markets fail to allocate resources at 6, if markets produce 10 or markets produce 4. And 10 is normally possible with a negative externality if optimum is 6, and 4 is normally possible with a positive externality. So there is overuse in negative and underuse in, or under consumption or under production, whatever you want. Right, what is the socially optimum level, socially optimum output more beneficial to society? Right, at a socially optimum output, companies would pay for the external cost, which would benefit the society. Firms would reduce the production that will lower the impact of the negative externality on society, which is more beneficial. So what we're saying here is, instead of 10, firms are going to produce 6, as simple as that. So that will reduce this deadweight loss. Actually, it's going to delete this. So the optimum is going to be, so the logic behind this is this will be paid for. That's the logic behind. If you remember in one of my lessons, I think it's lesson number 79, I mentioned that if it was possible to quantify the external cost and add the external cost to this one here. This here represents the private cost, the cost that you pay as the consumer of that demerit good. And so this here will be the sin tax that the the government is going to charge on this good. And so that will reduce the consumption from 10 to 6 and even the production of those demerit goods. Right, the next one here, study the graph below, no, the cartoon below and answer the questions that follow. Let's see here, it says market failure. Then it says, why did you leave your last job? And then it says the company relocated and didn't tell me where. So we are having a situation again. I'll repeat. We said we have this one, Millie. Okay, so the M is for missing markets. The I is for imperfect markets. The E is for externalities. And the L is for lack of information. And the I here is for immobility of factors of production. And here it's imperfect distribution. Okay, so this is imperfect information. This is imperfect distribution of income and wealth. So we are seeing a market failure here. The company relocated and did not tell me where. So there's a lack of information. So this is what we're having here. All right. Okay. So which cause of market failure? Okay, I have given the answer already. It's incomplete information or imperfect information. Right. Briefly describe the term market failure. I said failure of markets to allocate resources at an optimum level. How can labor as a factor of production become more mobile? Training can increase mobility, attaining skills, increased wages, all those things, they can increase mobility, because immobility of factors of production can cause market failure. So the question here is trying to imply that what can be done to make labor mobile. Then how does the South African government attempt to solve the problem of income inequality? And one of the biggest things that government does is using the progressive income tax system, which is charging high income earners more tax than low income earners. That bridges the gap between the haves and the have-nots, or the rich and the poor. Another one is levying indirect taxes on consumption, while certain basic items that the poor often consume were excluded. Providing free primary health care in provincial hospitals and clinics. Making provision for those who cannot afford to pay for by offering a free basic education. Making transfer payments, like what the government does through social grants, and subsidies payable to the poor, like the RDP houses and previously disadvantaged individuals, or PDIs. Implementing minimum wage. We talked about minimum wages in lesson number 79. Even the graphs, we discussed them. I think the next question is on minimum wages, if I'm not mistaken. Right. Implementing job creation programs. Implementing broad-based Black economic empowerment and labor laws. All right. Yes, I was right. Minimum wages. There we have it. Right. Let's see here. Study the graph below and answer the questions that follow. It says minimum wage. Then it says in South Africa, there are different categories in which minimum wages are applied. We have civil engineering, contract cleaning services, domestic workers. In lesson number 79, I used domestic workers as an example. I was using the word helper and maid. Then we have farm workers, forestry, hospitality, leadership allowance, private security, wholesale and retail, taxis and bargaining councils, minimum wages. In the United Kingdom, however, there is a national minimum wage that includes all sectors. All right, so let's study what we see here. Just like we did in lesson number 79, demand and supply, or the market, says the wage should be 2,500. Okay, and 200 units of labor are demanded and supplied at the same time. All right, then now government implements a minimum wage which is above the market wage. So this is going to mean that so many employers are not going to afford this 3,500. But the same thing is, the other thing that will happen is the 3,500 is going to attract people that were not willing to work for 2.5. So those people were not counted on the unemployed list because they were not actively looking for employment, because what the market was offering was lower than what they would desire. So for that reason, yeah, these people were not. But now from the government's announcement of 3,500 being the minimum wage, this then makes people who didn't want to work to start looking for employment. So for that reason, we are going to have a discrepancy here. We are going to have demand for labor dropping from 200 to 100 and supply of labor increasing from 200 to 300. So we are going to have a difference of 200. All right, so let's get down to business. Identify any two sectors in South Africa where minimum wages are applicable in the extract. Now, getting this one wrong, you deserve lunch, because here are the answers in here. Here are the answers. You are not going to even think. So if you get this one wrong, honestly, you deserve lunch and a full course meal, because there is no way you can get this one wrong. How would you do that? Right, the next one, it says here, briefly describe the term minimum wage. All right, the minimum wage is a remuneration a worker should earn legally per hour, per day, per week for the work that they have done. What is the advantage of having a national minimum wage instead of a minimum wage per sector? Having a national one, it prevents discrimination among workers in the different sectors. The national minimum wage could be higher, which will improve the standard of living. Okay, that's true, and arguable at the same time. There is going to be discrimination, obviously, if government sets, let's say, a minimum wage of 3.5 for farm workers and 4,000 for domestic workers, because farm workers are going to say, oh, so you think domestic workers are better than us? Why would you set a minimum wage which is for domestic workers that is higher than ours? So that is going to cause, it's true, discrimination. But a national minimum wage is just a general one which just says 3.5. So everyone who works must earn 3.5 or more. So that reduces the risk of discrimination. Right, refer to the graph above and explain the implementation of the 3,500 minimum wage. And I think I've done that already when I was saying increasing from 2,500 to 3,000 is going to cause unemployment here of 200, because initially 200 was what demand and supply says, and there was equilibrium there. 200 people want to work, 200 employers are willing to employ. But the implementation of the minimum wage means that now supply is going to be 300 and demand 100. So there's a discrepancy here of 200. So that's what you basically have to say. All right, there we have it. The wage rate will be higher. At this rate, more people will avail themselves. Therefore, the supply of labor will increase from 200 to 300. On the flip side, the demand for labor will decrease from 200 to 100, because people are saying, oh yeah, we cannot afford it. So this will create an oversupply of workers. Supply exceeds demand, and then unemployment will occur. The next one, it says study the graph below and answer the questions that follow. It says here taxes on cigarettes. So we can see here this one is for a negative externality. All right, so what's going on here? This 200 is what the market is supplying. So this is the market equilibrium. So this one here is the market, and this one is what's efficient. Why do I say this is what's efficient? Or this is what's optimum. Let me use the word optimum. Right, so why do I say so? Because this one here does not include the social cost. You see, this social cost here. So at 260, it costs the society this much. You see? So this cost is not included on this 260. So government then intervenes and charges a tax that is equal to the social cost, and that is going to increase the price, and then consumption drops to 200, and when consumption drops to 200, the price is now 130. So if ever there's a question that asks what is the tax, it will be the 30, the difference here. Or what is the social cost, it will be that difference. Right, identify the price of cigarettes before tax. 800. That's a simple one. What quantity is demanded after the government imposes? It's 200, because after government imposes a tax on cigarettes, it drops the quantity, because the question is asking quantity. So you come on quantity, it drops from 260 to 200. There we have it. Right, clearly distinguish between merit goods and demerit goods. All right, merit goods are goods that are deemed to be good. Demerit goods are goods that are deemed to be bad or harmful. So you can find your words there. All right, but you can say anything along those lines. Use the graph above to explain how a tax on cigarettes will reduce market failure. All right, so what will a tax on cigarettes do? It's going to reduce market failure in the sense that the market is oversupplying. The market is supplying 260, so it's going to reduce it to 200. It's as simple as that. That's what you have to say, and that is what is being said here. All right, let's go to the next one. Study the pictures, because this wouldn't be a cartoon. These are pictures. Study the pictures below and answer the questions that follow. Picture 1 shows us a positive externality. Education, it's a merit good. Here we see what? Rising unemployment. Oh yeah, it takes you back to writing the word milli. Okay. Yeah, so what's going on here? This one here is it will be imperfect. Let me see. Imperfect distribution of income and wealth. It will be this one here. Imperfect distribution of income and wealth. Then this one here, it's a demerit good. It causes a negative externality. And amongst these, it's not missing markets, it's not imperfect, it's externalities. So this will be the E, the externalities. And this one here is pollution. And let's see, it gives us a negative externality. So these are externalities as well. Right, let's see. Name the cause of market failure as depicted in pictures 2 and 3. Okay, that's easy. I've given you the answer. Picture 2, it's imperfect distribution of income and wealth. Picture 3, it's externalities, actually negative externalities, because I want people to stick to this, because according to the exam guidelines, we should use these: missing markets, imperfect markets, externalities, lack of information, immobility of factors of production, imperfect distribution of income and wealth. So I would prefer saying externalities and then maybe saying negative. It's picture 3, ne? Yeah, picture 3, negative. Explain the term market failure. Okay, I said it 1,000 times now. It's failure of markets to allocate resources at an optimum level. How will a lack of information as a cause of market failure influence consumers? Okay, how will that influence? They would not know where to access certain goods and where the goods and services are affordable. Okay, so it's as easy as that. Explain how government can intervene in markets that are affected by externalities. Use pictures 1 and 4. So picture 1, we have merit goods. It gives us a positive externality. So obviously government will have to subsidize. So here you talk about subsidies. And here it's a tax. But you can't say syntax. Of course, we gave you syntax in the lessons. But this one here is pollution. So it cannot be a syntax, but it's environmental tax. So you have to say that. Right, so picture 1, like I say, it's subsidy. Picture 4, charge an environmental tax. You can't say syntax because syntax is for cigarettes, for alcohol, things like that. All right, the next one. Let me see. Study the, what is this? The information. Could we say this is a picture? Whatever. Study the information below and answer the questions that follow. It says here public sector project. So it's a project by the public sector. And here you see cost, here you see benefits. So this is a CBA. Cost benefit analysis. So you analyze the costs, you analyze the benefits, and you see whether or not a project is feasible. And government does this when they want to embark on a project. So they do a cost benefit analysis. So this one here, you see the benefits outweigh the costs because the benefits are bigger than the costs. So this is a worthwhile project. So government should continue and invest 12 million into this project because the benefits outweigh the costs. So that's cost benefit analysis. So you're analyzing the costs against the benefits, and you want to do it to see whether or not a project is feasible. So identify one external cost in the project above. So external cost. So you come here on the costs, building costs. This is internal. Labor costs, high quality equipment, natural. This one here is the external cost. Pollution. Identify the social benefit. So something that is going to benefit the society. Okay. Increase in revenue. I think this will be for the government. Increase in savings. New jobs. This will make sense. Quality of development. No, that one. New jobs, quality, service deliveries. What can the government do to reduce the external cost? Okay, so what can government do to reduce pollution? Okay, we even talked about in the previous question. The government can install equipment that reduce pollution, design the plant in such a way that pollution will be limited to the minimum, tax the polluter, issue marketable permits for firms to pollute to a certain extent, and then set maximum levels of pollution. How will the government benefit from the approval of the project above? You can see this is how the government benefits. So just look for anything that is government related. So the government will earn more revenue from selling the product. The government will receive more money from taxes and be able to create more jobs because that helps the government. Why should the government do a cost-benefit analysis before starting each project? I think I've answered this already, is to see whether or not a project is feasible, and so that the government does not spend more money on something that will benefit them less. So make informed decisions, because if you do a cost-benefit analysis, then you see that costs outweigh benefits, then there's no need to put money on that thing because it's pointless. Then be more objective in its decision making. instead of, right, then be more effective in the allocation of resources. Right, so this brings us to the end of the topic, dynamics of perfect markets, market failure. It says here, and exam prep, perfect markets, market failure. You all know what we were doing. All right, so I just forgot to change this when I was doing the other one. All right, so as usual, thank you so much for joining me, and please subscribe to the channel. We are doing this to help out there because due to COVID-19, learners, some schools are closing, and we are having cases every now and then. Gauteng is a hotspot. So this is how we can help you guys and make sure that you don't fail. Also, not just you learners, but also help teachers who cannot be teaching right now because of COVID. And so your learners won't be left out, so they can just join in, watch some lessons. I'm going to try and do everything that I have to do to ensure that the whole syllabus is on my channel. And so in as far as exam prep is concerned, this is the third video, and so I'm done with dynamics of with microeconomics. So now from here I'm going to try and do macroeconomics, circular flow, business cycles, public sector, those topics. And then once I'm done with that, then I can move on to other topics. All right, thank you so much.